Welcome back to Investing Talk Podcast. Today, we're doing a deep dive into something many of you might be curious about. A company operating in a really critical and, well, interesting space, energy fuels. We're going to unpack whether now is, a good time to consider investing in it.
Yeah, and our goal for this deep dive is really to sift through the sources you've shared with us, try to cut through some of the noise, and give you a clear picture of the key factors for energy fuels. Everything from its financial health, market sentiment, and of course, the risks involved.
Okay, great. And before we really jump into the analysis, if you find these deep dives helpful, please do take a moment to subscribe, like, and maybe leave a comment. Your support really helps us keep bringing you these in-depth analyses. And hey, if you're feeling extra generous, maybe consider buying us a coffee. The link's usually somewhere below. So let's set the stage. Energy fuels. It's a name you might be hearing more often, especially with the global shift towards cleaner energy. What exactly does energy fuels do? And maybe give us some context on why their industry is so crucial right now.
Right. So energy fuels is positioned right in the middle of this whole energy transition conversation. They're primarily involved with uranium and rare earth elements. Think uranium for nuclear power, which is, a clean, reliable baseload energy source. And then rare earths, which are absolutely essential for a huge range of high-tech stuff. We're talking electric vehicles, wind turbines, advanced electronics. The list goes on. What makes it really intriguing, though, is that while their products are vital for future energy infrastructure, these are also sectors with intense global competition. And significant geopolitical factors definitely play a big role. It's a powerful space, but, well, complex.
Complex, right. And that global influence, plus I imagine the sheer cost of digging this stuff up, that often hits the balance sheet pretty hard, doesn't it? So when we peel back the layers on energy fuels financials, what picture do the core numbers paint about their current health?
Okay, looking at the sources. For the trailing 12 months, Energy Fuels reported revenue of about $69.59 million. And this is the part that really jumps out. There's a net income loss of minus $77.70 million.
Wow, hold on. Minus 77 million on 69 million in revenue?
Yeah.
That's quite a deficit. Is that sort of typical for companies at this stage in this industry, or does that signal maybe a deeper issue for energy fuels specifically? Because, for a lot of investors, that loss alone would be a huge red flag. How do we sort of square that?
Well, that's a really crucial point. For companies in this kind of early stage capital-intensive field like critical mineral extraction, operating at a loss initially isn't entirely uncommon. They often need massive upfront investments. Think exploration, development, building processing facilities, all before production can really scale up and hopefully become profitable. Now, the sources didn't detail specific debt levels or, cash flow trends, but given this recent performance, well, it implies they're probably burning through cash. That's definitely something you'd want to keep a close eye on if you're looking at this as a long-term investment. And it suggests more of a future-focused bet, not something delivering profit right now.
Okay, so it sounds like despite being in a really critical industry, there are some clear profitability challenges at the moment.
Exactly. And those challenges often lead to questions about how the market sees the company's value, which, brings us nicely to the valuation metrics. Or maybe what their absence tells us.
All right, yeah, let's shift gears from the raw numbers. How is the market itself valuing energy fuels right now? What do those valuation metrics tell us? Or maybe what don't they tell us?
Well, it's particularly striking in the information we have is the absence of a PE ratio, price to earnings. When that's missing, it often means the company isn't currently profitable, or maybe its earnings are just too inconsistent to calculate reliably. So direct profitability comparisons, difficult. The price to sales, or PS ratio, that's another common one, comparing market cap to revenue that wasn't provided either. We do know its market cap is around $1.47 billion.
Yeah.
And really, to understand if that's high or low, you'd want to compare it against similar companies in the uranium and rare earth space, see how it stacks up relative to its peers. And this really highlights a key difficulty. Without specific discounted cash flow models, those projections of future earnings brought back to today's value or solid relative valuation studies, it becomes pretty tough to accurately pin down the intrinsic value of energy fuels, like its real underlying worth, separate from just the market price fluctuations.
So if these key valuation metrics are missing or just hard to interpret, how does that impact your decision as an investor? Does it just make it a much riskier proposition, or does it sort of shift your focus elsewhere?
Oh, it absolutely shifts the focus, yeah.
Yeah.
It means you can't just rely on those traditional earnings-based numbers. You're forced to look deeper. Look at the broader sector trends, management's long-term strategy, maybe technical signals from the stock chart itself. For many people, yes, it probably increases the perceived risk. But for others, maybe those who really believe in the long-term story, despite the current losses, it might actually highlight a potential opportunity.
That makes sense. Okay, so moving beyond the core financials and these valuation hurdles, let's look at the stock's actual behavior on the market. What do the charts and indicators reveal about energy fuels?
Well, the recent price action has been quite volatile. The sources mention a beta of 2.01.
2.01. Okay, what does that mean in plain English?
Right, so think of beta as a measure of how much a stock tends to move compared to the overall market. A beta over 1 means it's more volatile. A beta of 2.01 basically suggests that if the broader market moves, say, 1%, energy fuels might potentially swing about 2%. Could be up, could be down. That tells you a lot about its risk profile.
Okay, definitely higher risk then.
Yeah, and looking at the technical indicators, things like moving averages, RSI, MACD, they're giving kind of mixed signals right now. The Relative Strength Index, RSI, that's hovering around 49.46, which is generally seen as neutral, not really overbought, not oversold. And the MACD, another momentum indicator, is also giving mixed signals, apparently. So all that together just reinforces that there isn't a clear, strong trend pushing the price decisively one way or the other at the moment. Overall, high volatility is the main story here. The stocks bounce around quite a bit, fluctuating within a 52-week range between $3.20 and $7.47.
A beta over 2 and mixed technicals definitely underlines that volatility. But even with all that choppiness, what's the general feeling, from the analysts who watch this stock closely? Is there a strong consensus?
Actually, yeah, there is. The analyst consensus is apparently strong buy, and they've put out a 12-month target price of $8.42.
842, that's quite a bit higher than its recent range.
It is. It suggests they see significant potential upside from current levels, despite the things we've discussed. However, it's worth noting the sources didn't give us much on, say, social media buzz or any recent insider buying or selling activity.
Right, and the analyst consensus is interesting, but the lack of buzz or insider info is also kind of telling, isn't it? Especially for a volatile stock like this. Those can sometimes be early clues. So looking ahead then, what are the potential catalysts? What could really move the needle for energy fuels in the near future?
Well, one clear date on the calendar is their next earnings report. That's scheduled for August 1st, 2025, according to the source. That'll be a really critical moment for investors to see if there's any improvement, any shift in those profitability numbers we talked about earlier. Beyond that, thinking bigger picture, any significant changes in, say, nuclear energy policy or renewable energy policy could have a huge impact. Given their role in providing uranium and rare earths, favorable policy shifts, maybe government incentives for domestic production or processing here in North America, those could be massive drivers for their business.
So policy really could be the wild card. Okay, well, every investment has risks, and it's pretty clear energy fuels has its share. For someone listening, considering this company, what are the main red flags? What do we absolutely need to be aware of?
We can probably break the risks down into a few buckets. First, you've got the stock-specific stuff, that high volatility we just discussed, beta over 2, and those ongoing operating losses, which put a strain on the finances. Second, there are sector-specific risks, significant ones, because of those geopolitical factors we mentioned, plus just intense competition in both the uranium and rare earth markets. Think about supply chain risks or sudden shifts in global demand. And finally, there are the macro risks. A broader economic downturn could hurt demand, or big changes in overall energy trends globally could impact their long-term outlook.
Right. It's definitely clear that while the industry itself feels critical, there are several layers of risk to really consider here before jumping in. So let's try and bring this all together. What does all this mean for you, our listener? After digging into this, what's the overall assessment and maybe some practical advice for someone considering energy fuels?
Okay, so based on the source material we reviewed, the overall rating given is a 6 out of 10.
6 out of 10. Okay.
Yeah, and it really captures that tension we've been talking about. On one hand, energy fuels has that strong buy consensus from analysts, and it's clearly positioned in strategically important sectors for the future. But on the other hand, it's facing pretty significant challenges with profitability right now, and the stock itself is highly volatile. So what this means for you really depends on your investment style, your time frame. It might be a better fit for, say, long-term investors, those who have a higher tolerance for risk and volatility, and who are really optimistic about the company turning things around and capitalizing on that future potential in uranium and rare earths. Short-term traders, though, they should probably be pretty cautious given how much the price can swing unpredictably.
Okay. That makes sense. What about some practical pointers, like entry points or managing risk?
Sure. The source suggested a potential entry price range of roughly $5 to $6.50. For those who use stop losses, setting one maybe 10% to 15% below your entry price could offer some protection against a sharp downturn. That's optional, of course. And on the upside, a take-profit target might be somewhere in the range of 20% to 30% above your entry price. But you'd want to adjust that based on how the market's doing overall and your own comfort level with risk. But really, the main advice is, if you do invest, you absolutely need to keep a close eye on those future earnings reports and any major developments happening in the nuclear and rare earth sectors. Those will be the key drivers.
Okay. It definitely seems like energy fuels offers a fascinating window into a critical industry, but yeah, the message seems clear. Patience and a good understanding of volatility are absolutely key for anyone thinking about investing here.
Exactly. And this deep dive really makes you think about that core tension, the difference between a company's potential in a vital future-facing industry versus its current financial reality. What do you think stands out as the biggest factor for an investor to weigh here? Is it the long-term strategic importance of what they produce, or is it those immediate, very real challenges showing up on the balance sheet right now?
That is a great question to mull over. Definitely food for thought. Thank you for walking us through all that. And thank you for joining us for this deep dive. We really hope it's given you some valuable insights into energy fuels.